Joining me now in studio is Aheesh Singh from MP9 Asset Management to share his analysis on the day's market performance. Thank you so much for your time, Aheesh. It's been quite interesting to see how the JSE has performed throughout this week. And I'm not even exactly sure if there was any kind of thinness that came through after the public holiday, but it just seemed like it was searching for direction. Is that the feeling that you've been getting?
Yeah, definitely. I think the JSE's been moving quite sideways, waiting for what global markets are going to do, what the Fed's going to do, and just general uncertainty, I think, in the stock market overall. With that being said, though, markets are still relatively quite high.
Okay.
So.
Okay. And actually, funny enough, I actually have not looked at where the JSE is. I've just been looking at the day-to-day movements. But you're actually right. It's just below 100 100,000. So yeah, still pretty high, still pretty good. And I'm guessing that's also largely coming from the resources sector.
100%. So you're seeing resources move more, as you said. Industrials have been a bit under pressure.
Yeah.
So the gold shares and the other resource shares have been keeping our market up. I think if you strip that out, the JSE will look very different.
Yeah. Okay. Very, very interesting. I mean, just in terms of the catalyst that you are looking at, you mentioned monetary policy, but now we have, tariff talk coming back. Is that still something that you are looking at in terms of the catalyst for the market, or do you think that we've largely worked it out and any new announcements maybe won't be as much of a market mover as we had seen in the past?
Well, that's a tough question. But I think, look, Trump says things every day. It's tough to sort of know what's going to happen next. And I think as an investor, you have to take a wait-and-see approach and respond over reacting.
Yeah.
I think that's very important.
Yeah.
That's something you always have to do as an investor. But I think for what has been said right now, markets have digested all the news that has come out already.
Yeah, I even see, even with the pharma tariffs, yesterday we saw that big move on Aspen down 5%, but actually today not a lot of movement. So I'm guessing investors are just deciding, you know what, let's just take a step back and see what happens. But the 1st of October is next week, so we will see what happens between now and then.
I think it's important also. You mentioned Aspen.
Yes.
Aspen also has their own issues.
Exactly.
So, you can't only call the move that happened just as a result of the tariffs. I think it's some of the companies in our market have some structural issues.
Yeah, something to keep in mind there, because it might just be a perfect storm coming together of internal and external factors as well. All right, well, it is a Friday, so not a lot of company news
not much.
out on the JSE. But let's talk about Prosus. It actually announced this morning that OLX is acquiring a car platform in France.
Sure.
Just highlight the details of that deal for us, and I guess really what it means for the growth runway of OLX and Prosus itself.
So this is Prosus's or OLX's first major push into Western Europe. And I think the classifieds or the online car market in France is relatively underpenetrated, and I think Prosus and OLX are looking to take advantage of that. And this acquisition fits quite well into their current sort of strategic objectives. We're trying to build the e-commerce businesses. So it'll be interesting to see how this plays out. I think execution is very important with this. However, they are underpinned by Tencent, and that's a brilliant business. So.
Yeah, it's really interesting because, of course, for a long time, we were all pinning our hopes on Tencent. So it's nice to see all these strategic moves that they are making in that e-commerce space, so that part of the business actually contributes positively to the bottom line. Well, as we were talking about resources earlier on, I actually saw something very interesting, a SENS announcement on DRD Gold. I actually didn't expect this, that an asset manager, Van Eck, let me not say Van Eck because I don't think it's South African.
No,
so it's Van Eck Associates Corporation. So it's offloaded some of its stake in the gold mine. I think now they just have under 1.5% of the share capital. And this is in a time when gold has been trading at or near record highs. What do you make of this?
I don't think this should be seen as a strategic disposal.
Okay.
If my memory serves me correctly, Van Eck is an ETF manager. So this could be just them rebalancing their portfolio. And also you mentioned it's a less than 1.5% holding. So I don't think that's significant in this case.
Ah, okay. I mean, just looking at the general gold narrative, because they've run really, really hard, and just looking at that chart there on DRD Gold, I mean, it is at a peak. And I'm wondering if maybe as much as this could be a rebalancing, if maybe some investors are seeing this as a time to
possibly
take some profit.
Yeah, I think you're definitely seeing that. I'm sure fund managers that were overweight are now maybe shaving some of their positions. And I mean, it's justified given how all these commodity companies have rallied, and who knows what is to come. At the end of the day, gold companies are underpinned by gold, which is underpinned by the gold price, which is then in turn underpinned by investor sentiment and what is happening globally. And I think gold is seen as sort of a fear index, if you will, or an uncertainty index. I think the more uncertain markets are, the higher gold goes. And I think that's where we are. It's very, very few times in an investment cycle will you see stock markets and commodity prices all go up at the same time, as well as bond yields strengthening. So this is a very interesting time to be an investor.
Okay, well, talking about interesting times, of course, it's always interesting to see what investors are picking as their stock picks. So before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
I am paying up for something that has moved, admittedly, but I think another structural long-term trend is in place in copper. And my pick of the day is Anglo-American. I think the story's still got a long way to go before it's unfolded. We saw the supply disruption that is going to be a number of years, 2027 before its full restoration from Freeport McMoran's mine that flooded. And I think, Anglo's is positioning themselves incredibly well for this commodity for all seasons, really. They are deeply integral to new technology, EVs, smartphones, infrastructure, AI data center build out, energy transmission for the AI data centers. So copper is just everywhere, and AI is becoming more and more a copper play and less everything else play. So a little bit of iron ore will still be there, but nothing else. And so I like it. I think there's a long road to run.
My stock pick is L3Harris Technology. It's a defense stock based in the US. I would normally go for General Electric, aerospace, but they're a bit expensive. This is my second choice. What I like about them, they are in the right sectors, whether it be electronic warfare, radio telecommunications, a little bit of rocketry in the form of missiles. So it's not big systems, but systems that everybody needs, and specifically the Europeans can buy and use. It's not a F-35 fighter aircraft that's really not built for the European theory or theatre. It's products that the Europeans can buy right now and apply as far as their defence spending is concerned.
Okay, Aheesh, let's carry on with the trend of commodities. Grant mentioned Anglo-American. Of course, you know the corporate action that they are under right now. And quite interesting that he said, highlighted copper as the commodity for all seasons. What do you think of Anglo-American?
Look, it's something we hold in our portfolio and we've held for a while, and I can see the value in it, and I understand his thesis, and I think he's right. For as long as this thesis stands, Anglos is something you'd want to hold, and yeah, I agree with it.
Okay. What about L3Harris? So I had actually never heard of it. Of course, we know of the Mag 7, and people don't usually talk about what is outside of the Mag 7 in the technology landscape. L3Harris.
Yeah, so I think I understand his investment thesis as well, and I think for as long as defense spending continues to increase, you should see some value in L3Harris. However, L3Harris has run, and it is more on the expensive side. Yes, maybe a little bit cheaper than some of its peers, but still relatively expensive. So if you're taking a view on that, you'd have to take a much longer term view.
It's quite interesting because there are actually so many opportunities around that defense spending. You're looking at the technology side, but also you're seeing counters like Sirius Real Estate going for property that houses defense equipment. So it's very, very interesting. Let's get into your stock pick. Where are you finding opportunity today?
Sure. So PDD Holdings, which is an e-commerce business in China. It's also the parent of Temu. So I think it's a tough space for them currently, given what's happening globally with tariffs. But I think they'll soon pass that, well, in time. But at its current multiple of 14 times earnings and with the ROIC of just over 20%, it has run it's up 30% year to date. It is down 12% on a 1-year view, but I think there is value in the stock, and it should be a good compounder over a decent period of time, a long period of time.
All right. Well, happy shopping on Temu. Thank you so much for your time and for your analysis today, Aheesh, on what has moved investors' money. That was Aheesh Singh from MP9 Asset Management.